Hi, Babs, and welcome to this Property Life podcast. How are you?
Yeah, good. Thanks for having me.
So let's get straight into it. Tell us, Babs, how did you get started into property? Tell us a bit about what you did before, how you kind of got into property, particularly seeing as how you work in risk. So how does somebody who works in risk every day
Yeah.
decide to get into property investing?
Well, I think it was very much the job because at that point back in 2018, I was living in Lancaster but working in Manchester and had my daughter who was less than a year old and having to commute. So having to drop her off at nursery, catch a 20 past 7 train and then not being back. Well, by the time I got back from work, she'd be already in bed. So it was just that was my pain point, was just that commute of having to spend so much time away from my daughter and feeling like it was just not really what you set out to be when you're a parent, not to be with them. But I think with risk, everyone kind of thinks risk is your job is to tell people not to do things. But I think it's not, it's just understanding what you're doing, like what's the risk you're taking. Are you comfortable with that risk if things go wrong? And also just trying to think about what you might do to prevent things from going badly. So I think with property, and at the time working in an investment bank, so being familiar with different investment classes, property is tangible, you can see, and it's easily understandable compared to some of the stocks or crazy money market stuff. But yeah, I think it was I'd been a bit accidental landlord a few years before and sold at a loss and just kind of thought, I just didn't know what I was doing. And then going to the training, it was like, right, I get this and I can see how this can work. And that kind of got me excited. So yeah, I think it was just the training in Caroline and realizing that I was in a pain point. And as much as the salary felt comfortable, it wasn't going to give me the life that I wanted or the freedom to do what I wanted to do.
Did you have any properties before you got into that? I know you said you dabbled a little bit, but
no, just at the point of the training, just had the residential property. So
yeah,
just
okay.
just my house, and I think I was very much in that overpay the mortgage, try and pay down the mortgage, because that's what it's a sensible thing to do, right?
Yeah, exactly. Looking to, if you work in risk, that's kind of what you're looking to mitigate all those risks, right? So, as I said, it's kind of the dream as sold, but not the reality is not actually that exciting at all. So, okay, so tell us a little bit about, you came on some training, and you got started. I know you got started straight away. You kind of got the spark, didn't you? And so, tell us what happened next.
Yeah, so kind of went gung ho into it, viewing properties. And my first property deal I got was actually a block of flats, which at the time my thinking was that'll just accelerate me further to that financial freedom figure. And I think it was on the mentorship where both you and Rick were just like, that's quite a advanced strategy to start with. But yeah, it just kind of got me the bug. And it's crazy because my current strategy that I'm excited about is title splitting. And that I've still got that first block of flats in my portfolio and it's done very well for me. But I bought that for £142,000 and now through title splitting it, when I come to refinance, it's going to be like a £500,000 block, which just is mad because the deal worked when I did it, but it's just even better with the more knowledge that I've gotten over the years.
Yeah, I remember that block, and we're seeing that at the time, and remarking what that was a big step for someone to do straight off the bat, coming out the training as a first project. But I think having talked to Rick as well at the time, we knew from within a couple of minutes of talking to you, perhaps on that mentorship, that that you had this level of determination and ability that we thought, look, you can pull this off. We could both see that. So that I think that's it wouldn't have been the right step for a lot of people, but I think for you, it was, and you could pull it off. So you bought a block for 142,000, 6 flats.
Yes.
Right on the promenade in Morecambe. And Morecambe at the time, it's one of those kind of seaside towns that had its heyday and it kind of fell from grace a little bit. But what's it doing now? Is it back on the up again, Morecambe? I know there was news
so,
Eden project.
Yeah. So I think there have been a few factors which are good for Morecambe. So there's all the buzz about Eden Project North, which at the time of the mentorship was still a bit of a rumor. Like it was kind of like, there was not much certainty that it was actually going to happen. But Morecambe's been given levelling up funding from the government, and Rishi Sunak's been up. So it's all looking a lot more likely that 2026 there'll be this Eden project now in Morecambe. There's
Yeah.
an ITV series which has done like 4 series now in Morecambe. And also Tyson Fury. I think the fact that he's now got his show on Netflix, I'm getting a lot of people messaging me saying, "Oh, I want to come visit Morecambe now," because it's all promoting Morecambe and giving a bit more buzz and a bit more profile to what was a fairly neglected seaside town before. So
we could see that you bought this block. It was a great, a great property, great, amazing price, 142,000 for 6 flats. And now, if I remember correctly, you're operating some as serviced units and some as buy-to-lets. Is that right?
No, they're all buy-to-lets. Because I think at the time, at the time of the mentorship, 2 were running as serviced accommodation, but that was to give, if anything, my partner something to do because he wasn't working. But yeah, I think the mentorship was a kind of the start of the realization that things weren't so good in that relationship. And I think as much as it was actually his idea to go to the 2-hour seminar and to get involved in property, I think he just didn't want to put the work in. And I think there was probably a bit of over time jealousy that I was kind of pushing ahead and getting the results and a bit of the recognition. But so it was a bit of a turning point and a wake-up call that other people that I'd meet through training or just through property networking were calling out, "Oh, he's quite gaslighting and quite negative towards you." But I think at the moment when you're so gung-ho and involved in just talking to solicitors, getting things over the line, dealing with tenants, dealing with estate agents, and holding down the job and with the daughter, I think the mentorship gave a bit of time to kind of see actually what are you doing?
Yeah, I mean, I think that's an important aspect of the mentorship it's not just about property, it's about helping you and helping that person who is really wanting to make it work in property to be successful. And that's why we were scratching our hair out, just thinking, well, I'm not sure how we're going to work here. So we managed to kind of split things off and give you the attention that you needed. I remember kind of on the last day of the mentorship, you were just on your own. And I think that was a moment that we kind of thought, okay, we just need to focus on you now, and and give you the tools and give you the support that you need to go off and be really successful in property, which is amazing, and subsequently you did end up splitting up from that partner, and you've now got a new partner, you've got a second child, and things are very, very different for you. And I know you've gone on to do some incredible things in property. So, so tell us a little bit about kind of what happened, after that.
Well, I think, because I think it was like 2020 was a rough year because there was the divorce and that kind of all finally happening, which was a great thing to actually happen personally. But at the time it was tough, and there was out of the 6 flats, there was the basement flat which hadn't been done, and that was something that you yourself and Rick were kind of saying, that's a great opportunity. Why don't you just get that one done? But I think after doing the 5 flats, I was a bit fatigued, and but it did kind of open my eyes that I should get that flat working as well. But that was a bit I got burnt as well because it was Cowboy Builders the first time I got that flat renovated. And being from Risk, I'd ticked all the kind of boxes. I'd used somebody that somebody else had used before. I'd got payment terms and stuff. I had insurance, but it was a lesson that you got to still go with your gut. You can't just tick off some things. Things can still go wrong. So Cowboy Builders, divorce, I got scammed. So I think 2020 was just a bit of a rough year, but it also made me so grateful for property because I did find myself off on sick leave, and I've never been on sick leave before. But statutory sick pay is pennies. It's like just over £400, which is not a lot of money to cope. And I don't think I would have coped if I didn't have the portfolio to kind of pay the bills and keep things ticking over while I kind of got through everything to come out the other side. Yeah, I really enjoy property. I do. I am a bit obsessed and a bit of a property addict. So you kind of keep your eye on the market and seeing what's going on. So I don't even think I recognise the conscious ethics. I think it's all become, habits now. And but yeah, it was just talking to people. So got an off-market deal for a 3-bed semi-detached house, and this was when the market was crazy. And I was saying to the person, just put it on with an agent, and you'll get a really good offer within a week. You don't want to sell to me because I want a discount. I don't want, and I didn't even go aggressive in my pricing. So I made them an offer. They wanted it because they didn't want to deal with estate agents and people, and they had the real fear of the sale falling through. But it's mad. I bought that property, and then a year later, I bought that property for 135. Spent less than £5 just giving it a lick of paint, plastered a room, and got it rented, and it's still rented. And then across the road, sold for 210,000. So that's why I think it didn't feel like hard work, but they can be hard work. And the other buy-to-lets, I did one of them. Was occupied. So when I went to see it, I didn't quite realize how bad the walls were. So a 15 grand budget became a 25 grand spend, but still the numbers worked, and still it's that's doing well. And I think having the other ones performing kind of shouldered that extra spend as well. So
I think a lot of the kind of new investors or amateur investors think it's safer to have just like one property sometimes. But what you're saying is basically that having the portfolio gave you the comfort that you could maybe spend more on this project because your portfolio covered it. And this is something that I teach and train a lot of our students or anyone looking to get into property. It's like one isn't going to do it. You have to have the portfolio that gives you that security. I just want to jump back and just say, you kind of glossed over a little bit. So I'm just going to take a little bit more detail on that.
Okay.
On your direct to vendor property, because I get a lot of students coming to me, a lot of people wanting to get into property saying, oh, it's really hard. You can't get direct to vendor. You can't get money in, money out deals. But here you are in 2021, when the market was going crazy. When you turn up to viewings and there's 20 other investors looking to, buy properties, here you are picking up a property for 135,000 direct to vendor because you'd made that effort. How did you get that direct to vendor? Talk us through that a little bit, because I'm really interested in hearing how you did that.
So there was two that in 2021 that I got direct to vendor. And I think, I know. So the first one was through people knowing that I was involved in property. So it was actually my sister introduced me to somebody that she knew who was looking to sell. So like people knowing what you're doing, that helps. And the second one was the property was advertised, so it was on the market and wasn't selling. And I tried to speak to the estate agent to get that access that way, and it was one of the the online agents. So I knew there's a fair chance if I got a viewing through the agent, I'd be speaking to the vendor anyway, but couldn't get a viewing. So I wrote a letter and posted it through the letterbox, and the vendor called me back. And she'd already taken it off the market with the estate agent because she got fed up. So I like the keep an eye out for the online agents, because if someone's wanting to save pennies, normally it means you're going to get access to the vendor and find out what their pain is.
Well, there's a great little tip. There's a golden nugget for anyone listening to this. To say again, so that's those online agents. So your Springbok, Yopa, agents like that. These online agents. Little golden nugget for you guys listening there. Those are the ones to focus on, because already you've got a vendor that is looking to save some pennies. The online agents generally don't give the best service. That's why they're cheap. So a nice little opportunity to get direct to vendor there. I love that. Absolutely love that. So, and you found a vendor that didn't want to particularly list with an agent because they didn't want people traipsing around the house. And they get this quite a lot. And again, I think a lot of new investors or investors in property make all these assumptions that why would anybody sell cheaply to me if they could sell on the market? So maybe tell us a little bit about that. What did you say? How did you direct that conversation with the vendor?
Well, I think it's just I think I was just really honest with them and just said, because I did say, if you put it on with an agent in this market, you're not going to struggle to sell, because there was nothing wrong with the house. It wasn't a house that needed a lot of work, or you need to do something funky to kind of increase the value. It just was a good solid house that people would like to live in. But I think the training and experience you gain, sometimes it does surprise me, because I think you always assume that everyone's at the same level, but then when you talk to people in your personal network, and you see their face or they say questions like, and you just realize how actually what is really scary to a lot of other people just becomes not even something to be fazed by. The more experience you get.
Yeah, it's just that experience you gain by just being out there and doing it. And there's a couple of things that I love about that particular deal. One, you mentioned everyone knowing what you do.
Yeah.
And this is something I really try and drum into anyone that comes and works with us, Property Wealth System, is you've got to start telling everyone what you do. So people don't know what you do, you're potentially missing out on all these deals,
Yeah.
So letting everyone know what you're telling everyone what you do. TTP, I'm sure you remember that term. TTP, talk to people. Yeah.
I have to say, it took me a while though, because I think, especially at the start, and I think even at the mentorship, you and Rick were kind of like, "What are you doing?" Was I tried to very much keep like personal, professional, and investing all very separate, because I thought, I don't want my boss to think I'm doing something I shouldn't be doing, and worrying about family and what they might think of what I'm up to. So I know, like Caroline said, it's like, my first, the first private investors that I was speaking to were people that I didn't know. It was people, some of them I've never even met, but just like trying the professional channels and different things rather than friends and family, which I know is what you guys, you're trained to go speak to friends and family because they should know, like, and trust you. But I just had this real issue of mixing. So it's something I had to overcome.
If we look about, okay, how much has that property made you? So you bought it for 135. It's worth over, what's it worth now? Over 200?
Yeah, 210 was what Across the Road sold for, and wasn't in much better condition. Like, it was very comparable.
Yeah. And how much did you spend on it?
Yeah, I'd say like if we include stamp and legals, it's less than like about $8,000 maybe.
Okay. So you spent $8,000, so you're in for about 142, let's call it 145 with a few fees. So you made yourself some equity there, of 65,000.
Yep.
By writing a letter and talking to people.
Yeah.
Pretty good.
Yeah.
And what did you do with that? Did you sell that? I know you don't really like selling stuff, do you?
No, I think I'm a bit of a hoarder of properties. Yeah. So I have done that property I've kept, and that's rented out, and the tenants are still there and they're quite happy. But yeah, no, I've done one flip. I did flip one property. It was a JV with somebody else. I found the deal. They brought the money. But yeah, I don't like selling. I like to, if I can find a way to keep it, I'll keep it.
Okay, so while we're talking on the subject of money and angels, we've kind of briefly mentioned that. So tell me about your experience, like finding investors. Was this a block for you?
Yes, I think being risk and cautious, and just also, you don't think it is hard to think why would somebody give me money. And I think, you guys talk about a lot in terms of like, there's that thought of going with a begging bowl. And I think I took so much pride in my professional career. Like, that's something that always sticks out from our mentorship, was when you kind of made me work out the hourly, actually what I was getting paid on an hourly basis when I factored in my commute and stuff. And yeah, wasn't that special.
But yeah, that's one of my favorite tools to use on a mentorship. I think is that one. It does kind of, yeah. I remember doing that. I remember sitting down doing that with you, and yeah, I remember your face was like, oh,
yeah, it wasn't so great.
Is that it?
Yeah, but I think I did try and because I couldn't. It took me a while to think about talking to family and friends about the fact that I borrow money to buy properties. So it was like professional people looking on LinkedIn, talking to people, or different networking events, and just in social media. There's lots of Facebook groups for property, and just finding people that way. But yeah, so I think
who was your first angel? What was that story? How did you get?
So first angel, was somebody I'd never met, and it was through a Facebook group. I just started kind of chatting and saying, and I was so surprised that they were prepared to lend money, because I felt like, I'm not that experienced, but but they were, as a professional investor, they knew they'd done property themselves, so they knew what they wanted. They wanted a security, so they were happy to provide 100%, but they wanted, a better interest rate for it and a first charge. So but it worked for me, and I was happy with that. And then on the JV, they bought the money, and we used another angel from that was one of their friends' partners who was prepared to lend us money. And yeah, now I think it's because people are aware of what I'm doing more. It is family and friends that are prepared to invest, so that's great. And sometimes it's like, now I'm much more confident knowing, because I got one private investor from Facebook, and they were somebody who hadn't got the confidence at that point to invest themselves, or were trying to find the perfect deal, I think. So by lending me the money, it meant they were getting an interest, but they could also kind of see what I was doing, and I think it kind of gave them the comfort to go and do it themselves. And they're really fine. So yeah, I think they come from different places, because it is like there's somebody who I'm talking to who was prepared to lend me like over $500,000 for a deal that I didn't end up doing, but that blew me away, because they were somebody I'd just spoken to on Zoom, and they were just somebody who used to be a mortgage broker, so they understand the market and what I'm trying to do, but they just don't want to do it themselves.
So we're back. So we're at Babs. So your daughter's now nice and settled. She's with you. You can see. Hello. But yeah, juggling life and property. So we've had some great stories about. So I love your angel story. I know that was a bit of a block for you, to be able to, to bring kind of work and personal together, and to go out there. And it's really interesting to hear that your first angel was someone you'd never met. Now this is something that I speak to a lot of students coming into property, that it just completely blows them away. It's like, why would anybody lend to you, when you've never even met them? And you mentioned it earlier. I'm going to go way back to kind of beginning. You mentioned 3 words. You mentioned know, like, trust.
Yeah.
And this is something that I teach a lot in my mentorships and through our training. It's to kind of get over this mental block of why would someone lend? Well, people lend and want to work with people they know, like, and trust. Yeah. So if you get to know someone and they trust you, and they like you, they'll lend to you no matter what you've done, whether they know you or not. And this is something that you kind of prove by doing it. And again, this is something that you've just, you identified this as a block. We talked about it, you worked on it, and here you are. You've gone on and had, huge success doing this. So again, it's just that kind of, learning what you need to learn, and going out and making it happen. So fantastic. Yeah. Okay. So let's move on to what's next for you. I know, if we rewind back to that mentorship, we were looking at your block of 6 flats, we were looking at other buy-to-lets, but we could see straight away that you were really, really capable and of doing more than that. And so we went to view an old hotel, didn't we? An old B&B. It was a bit battered. Great location though, just off the promenade, wasn't it? And 14 rooms, something like that. So was it more? It was bigger actually, wasn't it? I think it was bigger.
Yeah, I think it might have been 18 rooms.
Yeah, 18 rooms actually.
Accommodation at the bottom. So
yeah. So yeah, so it was an opportunity to look at this smart hotel kind of model. Now, at the time, again, for most people, this would have been a bit much to start with. But I said, on that mention, we identified that you were really able to kind of look at bigger things, having already done one block of 6. So yeah, there's something we looked at, I know, and it was moving into that space of apart hotels, short stay accommodation. So tell us a little bit about that. And I remember looking at this big building with you, and we started working out some numbers. And what did the numbers tell you?
I think the numbers said it was like, it was just, there was like, it just had to be, it was just a deal. It was going to work. The numbers were going to work really well. Even, we were stress testing at fairly low occupancies, and it still looked good. But yeah, I think it was just after the mentorship, in 2020, everything went a bit south. The deal kind of fell apart, in terms of like, I just couldn't give it any attention to focus it. So the deal just had to walk away from it, had to walk away from a couple of good deals at that time. But now, I think it's, I very much recognize that I'm still a bit in my comfort zone in terms of I'm just still doing buy-to-lets, but it's blocks of flats that I'm looking at, entitled splitting them, which is, so that kind of feels like that's my bread and butter, but I am still looking at a bigger deal. So as you know, there's that grade 2 listed property that secured, and that was an apart hotel.
So This is an exciting one. This is something we worked on together. Last year we did a bit of coaching
Yeah.
on this one, which is a really exciting project, right in the centre of town, historic old town, and it's this building kind of right there, isn't it? It's like right in the heart of this tourist town that is going to be. I think we looked at 8 apartments, and there's quite a few problems with that. So maybe talk us through this deal from kind of how you found it, what you're looking at, because I know there was loads of problems to overcome with this one, and this really kind of demonstrates that level of persistence that you need.
So we're still not there. It still feels like it's taking its time, but I'm okay with that because I think it is going to be a bigger. It is a bigger project. So it was a property that again it's been sitting on the market. It's an amazing building, an amazing location, but I think for most people it's like, what do you do with it? And it's it had gone under offer. I think somebody was going to turn it into flats. That fell through because I think they got a bit scared. Having met them at a networking event afterwards. But it's this great building. I think I just liked there's something about it and where it is that kind of appeals to the ego side of me. But it's also just it would work. And so I think talking to yourself and kind of looking at the plan and talking through options of what could do, you kind of gave me more confidence that this could be great. So even with an estate agent, managed to secure it on a creative deal. So I'm not going to have to pour the money straight up. But it's just it's taken its time just through to get to the legal sorted, just because the vendor has had it for so long. They've lost the title deeds. They've had to go for first registration, and they're trying to also confirm whether it is residential or commercial at the moment, because it's had so many different uses in the past. So it's a exchange and delay completion. So we're going to exchange contracts, and then I've got it's either a year or 2 years to actually complete on the deal. But I'm wanting to get planning and then go for development finance to get it over the line.
And what's it going to be?
It is going to be 7 units, 7 self-contained units.
Rented on short-term accommodation, kind of a part hotel.
Yeah, going for that smart model with the secure entry. So try and keep it as hands off as possible.
Okay, sounds familiar.
Yes.
And what are your projected numbers on that? What could that deal do for you, do you think?
So it's been a while since I looked at the numbers in detail, but it conservatively, like factoring in a 60% occupancy, I think we're looking at, after expected costs, about £11,000 a month. So and I know it will be variable over the year, but it's going to be a life-changing deal, kind of take it up to a whole other level than buy-to-lets have done.
So very exciting, 11k a month. And then from there, what's your plans kind of moving forward from there?
I think just more of the same. Like, I think it's like feeling fairly comfortable of just adding more every year. And so I think there'll be, the way I kind of see it is I think there'll always be a few buy-to-lets coming every year, and just keep an eye on the bigger deals. So there is another problem property I spotted not too far away in lovely Harrogate that with a price tag of over £1 million. It feels like that should be something that normally would be quite scary, or a few years ago would definitely have been too scary. But if I can get the deal right and structure the offer and it's agreeable, then it could work, or it would work. So there
we go. Sounds right in your wheelhouse there, Babs. I reckon stepping up to that level. Fantastic. Okay, so and when what's your plans in terms of working? So now you're kind of working, you're reducing your hours down to part-time. Is the kind of end of the risk job, is that in sight?
Yes, I think especially being off on maternity leave, I just don't want to go back. But I think the sensible thing to do, and being from a risk background, always go for the sensible option, is I want to try and try and go back, do my 3 months, get my bonus, and then be cutting right back or leaving. But I think it'll be try and cut down the hours and have more of a structured plan now to getting out of the job.
Yeah. So you got a plan on your terms to kind of exit, and you mentioned after your bonus comes next year at some point.
Yeah. I think compared to 2018, one good thing of COVID is that, you know, I'm fully remote, so I work from home, so it's not the pain, but at the same time, I think being off, you know, it doesn't excite me. It's the property stuff that I'm interested in. So I think I just, being off on mat leaves give me more that push to be like, what am I doing? Why am I still doing something that doesn't excite me?
Fab, right now, I wanted to ask you our 3 key questions or 3 key behaviors. What do you think are the 3 key behaviors of a successful property investor?
I think it's resilience, because I think you've got to be resilient, because every project throws up some new challenges. You know, you can, until you start doing the build or doing something, you don't really know what you're really in for. So and it's random stuff that can throw hurdles. So I think of one of the projects we're getting over the line now, and initially we're fully financing it with an angel, and then we realized we thought, oh, we're going to split the title at completion, so we'll get a mortgage, but then the vendor's had it so long, we can't split it on completion. But we've already allocated some of the angel funds to something else, so it's back to angel and bridge. We're all going to fully bridge it, and then the bridge wanted to make it a bit harder, so we're like, we'll